I'm Caroline Hyde. This is Bloomberg Technology. Coming up, Snap expected to price at $17 a share, but is the devil in the details? We'll break down the pricing day for the biggest social media listing since Twitter. Talking of Twitter, the social media company cracks down on bullies again and recruits machines in its fight against abusive behavior. We'll explain. And as Toshiba offers its memory chip business to the highest bidder, Foxconn emerges as the front runner, while the Taiwan-based company's billionaire founder covets Toshiba's tech. First to our lead. I'm in New York because Snap is where it's at, and it's said to price shares for its IPO at $17 each. And that price, well, the market value is almost, well, it's about $24 billion on a diluted basis, based on 1.4 billion shares after the IPO. The parent company of Snapchat, well, it will be the biggest social media listing since Twitter went public more than 3 years ago. Shares of Snap will start trading Thursday on the New York Stock Exchange, and we will be there live. Joining us as our guest host for this hour is David Kirkpatrick, CEO of Techonomy, Alex Barinka, IPO reporter extraordinaire for Bloomberg News, and in San Francisco it is Chi-Hua Chen, managing partner and co-founder of Goodwater Capital. And Chi-Hua, I wanted to start with you because tomorrow the question is $17 a pop. Will the shares pop?
You know, it depends a lot on what the investor demand is in the aftermarket. What we've seen is that these companies can have a lot of volatility. In the case of Twitter, it popped a lot. In the case of Facebook, it struggled to hold its IPO price.
Alex, 10 times oversubscribed is what we've been reporting. $17 a share. Is there enough, do you think, being left on the table? As Chi-Hua was pointing out, it's hard to muster these things, but Twitter certainly did.
It did, and you have to remember Facebook had the trading day glitch as well. So some of that is playing into it. The oversubscription, I will caveat that by saying investors tend to put in orders bigger than what they actually want because everyone's fighting for allocation for these really buzzy companies. But it seems like they don't want it to fly off the charts. Folks don't want this idea that you've left money on the table. Yeah. So we will be definitely watching from the floor tomorrow to see what happens and, you know, to see if there is as much demand as there is buzz around this listing.
Because it seems as though many of the orders came in at about the $17 to $18 range. Certainly Morgan Stanley, Goldman Sachs leading the underwriting want to see that it's not too much money left on the table. David Kirkpatrick, you've been telling me that actually this is a nosebleed valuation.
Well, I still think it is. On the other hand, there's a nosebleed's worth of demand. So I think there's a huge amount of people who really just want to get in on the hot new thing, who see this as the first opportunity of its type in a number of years. And I suspect a lot of them are still out there in the marketplace after the IPO as well. So I would expect the stock will go up somewhat after the IPO.
Chi-Hua, you have so much experience in this. You helped Chegg, you helped Twitter come to the market. And the daily active users is something that's been striking the market in particular. There was a slowdown shown by Snapchat's daily average user growth, whereas that wasn't the case for Facebook and Twitter. Do you think that's a cause of concern?
Yeah, I think that's actually the biggest concern facing the company right now is they really need to find a way to re-accelerate their user growth. If you look at them compared to Facebook and Twitter at the same point when they were going public, Snapchat is growing half as fast as Facebook and Twitter were on a quarter-on-quarter basis. And as you track the trajectories of Facebook and Twitter since their public offerings, it really is a tale of two cities. Facebook has continued to grow at a really rapid clip while Twitter has slowed down.
I mean, but Alex, thinking back to Facebook, it took a couple of years to prove that their strategy in mobile was the right one. David knows this well as well. Can you talk to us about the daily active users? They might be far less than Instagram, 158 million users, but they are addicted.
They are, and that's kind of the bet for Snap. Is you heard them push on the roadshow. We're not trying to win everyone everywhere for the platform. We want them to be more engaged. We did see some, hinks with engagement as well, but they're trying to keep folks in the platform, and that's how they're trying to bring in advertisers. Again, it's still so early in their money-making process. They've only been making real revenue for about 2 years.
It's already more than 400 million.
It is more than 400 million, but when you compare that to the big peers, that still just drops in the bucket. As they continue to pitch themselves to advertisers, they need to really prove that that is the right thing for them to be going toward and that they can keep users on the platform, especially if growth continues to kind of falter.
David, it's interesting. Of course, a lot of the chat has also been about the control that, of course, the two key co-founders maintain.
Yes.
And this is something, maybe a leaf out of the book of Google and Facebook, which have steadily taken control back as leaders of the business, but they were already proven. How much do you think you seeing this being talked about in the market and people now trying to push back, even regulators?
Well, it's taking something that Zuckerberg, in effect, began in sort of these kinds of companies by essentially retaining control to an extreme, in the sense that they're giving absolutely no control whatsoever to the shareholders. And my feeling in terms of what they have to ignite, not reignite, is actual profits. Facebook had money coming in. They have 400 million in revenue, but 500 million in losses. That's a 900 million, span there. So they got some serious work to do to actually make a real business that makes profits. Now, bringing in money from the IPO will help them fund that and also develop new capabilities. But I'm a little skeptical about this as a business still.
Chihua, at Goodwater, you've done some numbers. You've been looking at when they might be making a profit, not till 2019. I'm interested in, therefore, the value proposition in the longer term. Many feel if we do see a pop tomorrow, how long will that last? You actually bring up potentially this could be an M&A target in the longer term.
Yeah, I think that an asset like this with a really, really strong committed audience of 18 to 24-year-olds is something that a lot of companies out there are going to covet potentially as an acquisition if, as David said, they're not able to get the business model working. The way I would think about Snap is really as a media company, not a social network. Facebook as a social network is something that can target the entire world, every single user in the world. But Snap at 150 million highly engaged 18 to 30-year-olds could be a very, very valuable media company.
I was reading an article, Alex, and it fascinated me that actually the target market out there worldwide is not 1 billion. It's only like 600 million who are actually in that age range, really. And they've already said they're not really going into the emerging markets. They need powerful smartphones.
And to the point of it being a media company, that's where it starts to get interesting, because you think about where they're trying to steal ad dollars from, right? You have your mobile platforms and your digital platforms like Facebook, like Google. They're trying to take money from brands and from advertisers from them. But when you think about Snap as a second screen to a TV, that's where big money is. And if you know your target market, then that becomes more attractive. The issue is right now, Snap isn't giving a lot of data to advertisers, and advertisers love to see return on investment. Yeah. If I'm going to put money with you, what do I get out of it? So these will be some of the challenges and the things that I'm sure CEO Evan Spiegel and his team are thinking about as they're trying to close that $900 million gap between revenue and profit.
I mean, we have the breaking news now. It's official. Reports are pricing in the IPO. It is indeed $17 a share. Bang on with the Bloomberg reporting and the Wall Street Journal, indeed. David, going forward, when you look at these advertising, what about the hardware side of the equation? Because people are very excited about the glasses. There's reports that they're looking into drones as well. How much is this an
but these are other non-businesses. I mean, the glasses are a cool thing. They sold them from machines. A very small number of people got them. But, who knows whether that could be part of an actual business? We just don't know. A lot of people are talking about how Snap's real opportunity could be to go into augmented reality, and the glasses might be a sort of touching feet in the water for that sort of idea. And it's a wonderful concept, but then look at how much money Magic Leap has spent trying to build an actual working augmented reality product, and you realize that's not easy to do. So I'm not really holding my breath about them being a successful hardware company. I do think they're enormously successful at creating an entertainment, engaging experience for young people, and you've got to give them enormous credit for that. But I don't even really think of them exactly as a media company. They're a weird hybrid because they have network effects, because it gets better when more people use it, but they also control the advertising in a way that no social media company has ever done before. They treat that more as if they were a cable channel. In other words, they're basically putting out content and they're selling ads against the content that they essentially program. And that's very interesting, but whether the valuation on that should be considered comparable to a Facebook, which I frankly doubt. If it was a media company, the valuation is a lot less.
The key question is, do you wish you had got in on this company? And do you think, would you have been tempted? Do you think it's a good bet to be buying into right now with the leadership as it stands, having full control?
Yeah, of course I wish that I bought into this company. This is the one that got away, and every venture investor who was not an early investor in the company is feeling that way right now. On the issue of control, it's really not an issue. I know the optics of giving no voting rights at all to these shares look really, really bad, but at Google, they have a very similar structure, and they control the company. At Facebook, they have a very similar structure, and the founders control the company. Notably, Twitter doesn't have this structure, and Twitter has underperformed with a lot of challenges at the board level and at the management company level because of the lack of clarity from a founder with the moral authority and the long-term vision to make important strategic decisions.
David's got a very quick point.
I wanted to ask you, Chihuahua, do you see Spiegel as a Zuckerberg-type personality?
He is. I think he really is. Evan, early on, I met him in the fall of 2012, before he did his Series A funding round. And I remember as we took a walk around the beach in Venice, he told me how he was going to take down Twitter, how he was going to take down Facebook.
But why didn't you buy in then?
Yeah, that's a much longer story of a big partnership and the way that decisions get made. But he had a clear vision, and he had already identified at that young point in the company's history Tencent as the model that he admired the most in the market, and how he was going to build a multifaceted platform that looked a lot more like Tencent. He had just rebuffed an acquisition offer from Mark Zuckerberg the week before, who had flown down to see him.
Fascinating. Chihuahua Chen, great analysis for us. And, well, we'll wait with anticipation for tomorrow's pricing. I'm sure you will too. Managing partner and co-founder of Goodwater Capital. We thank you very much for your time. Of course, Bloomberg News reporter Alex Barinka going to be live for us tomorrow from the New York Stock Exchange. And David Kirkpatrick, CEO of Techonomy, is sticking with me. Now, a quick update on Yahoo. The company just filed a 10K, an annual report required by the SEC measuring a company's financial health. A few highlights for you. Ronald Bell resigned as the company's general counsel. Also, CEO Marissa Mayer offered to forgo her annual equity award and bonus given the 2014 security breach occurred during her tenure. Bloomberg News received a statement from Mayer stating, "I am the CEO of the company, and since this incident happened during my tenure, I have agreed to forgo my annual bonus and my annual equity grant this year, and I've expressed my desire that my bonus be redistributed to our company's hard-working employees who contributed so much to Yahoo's success in 2016. Wow. Well, coming up, Twitter continues to fight off abusive tweets. This time, well, the company is turning to algorithms. We'll bring you the latest next. This is Bloomberg. The fight continues for Twitter as the social network takes further steps to cut abusive tweets. This time, Twitter says it's turning to algorithms to identify accounts that engage in abusive behavior. The announcement comes after a record 3 million tweets were sent out on Tuesday night regarding President Trump's speech to a joint session of Congress. Joining us now from San Francisco, Bloomberg editor-at-large, Corey Johnson. It's been too long. And still with us, David Kirkpatrick, Techonomy CEO. Corey, to you first. Updating, new filters put in, basically no eggheads anymore is the idea.
Well, I think the idea is that there's some people out there who send some really nasty things to people they don't know and are for whatever lack of bravery they exhibit in real life, they're quite brave online saying horrible things to people. And it's a function of anyone who's on Twitter that they run into. The more public you are on Twitter, the bigger you are on Twitter, the more likely you are to encounter these trolls. And the company hasn't done enough to stop it. Obviously, if they've got these capabilities, all these great data capabilities, such as they're exhibiting today, they've had these tools at their disposal and chosen not to use them in the past. They've decided they can't put up with it anymore.
David, too little, too late?
Well, I don't think it's too little, too late, but if mean tweets has become such a thing that it's an entertainment feature on television, I think they have a problem they have to solve. Yeah. And I'm really pleased to see them taking this step. And I do think it's not irrelevant that Mark Zuckerberg put out that 5,800-word idealistic statement about all the ways Facebook could make life better for its members just a few weeks ago. I think that's something of a prod here to Twitter is to do something similar.
I mean, it was notable, the New Year's resolutions that we heard from, notably Jack Dorsey. He put it out on Twitter saying what he wanted to hear from his user base and what he would put in place for 2017, Corey. And interestingly still, the company does wildly well from public events. Look at it, record-breaking amount of tweets, but still doesn't seem to find the love from its user base to encourage any more to join.
Well, so I think that this is, you're right at the heart of this, Caroline. I think that, Twitter's, what's the biggest problem in Twitter's business model? Everyone knows it, right? It's the number of users that they have. So it's not just that the turpitude from these angry tweeters and these Twitter trolls is a part of their business model. Indeed, these are people who are very engaged with Twitter and sending out lots of mean tweets. There's also the question of the validity of how many people are on Twitter. Twitter cannot afford to take hits in its number of users. Twitter cannot afford to decide one quarter, you know what? 10 million of our 350 million users are just horrible people, or 10 million of those user accounts are 2 million horrible people, and we're canceling them out today to make the service cleaner, because they can't see that number go down. Wall Street won't tolerate it. Advertisers won't tolerate it. So they're really up against it here because they want to protect the number of users that they report, even though they don't actually want all those people as users, as evidenced by these trolls and what they're doing to try to limit them, but not completely get rid of them.
Interesting, David, that 350 million is still a lot more than Snap has, but they've never had these sort of issues.
Well, it's interesting the way Corey puts it as sort of a way to finesse the problem and sort of repress them without kicking them off. I think that's very, very savvy analysis, because they certainly can't show any user declines of some substance, or they would really be hitting the market now. I think, though, on the other hand, if they have any hope of growing, they've really got to reduce the problem of abuse so that ordinary people feel more comfortable being there. They have a lot of interface issues they still have to address. They are working on some of those, but this is key as well.
Corey, is there any catalyst for a change in the valuation of Twitter going forward? I mean, at the moment, it's still pretty near where it actually IPO'd from, not counting the 70% jump that we saw on the day that it did IPO. What are we looking for it to start to show some sort of beacon of light to the investor base?
Well, it needs growth. It needs growth in terms of how much it charges for advertising, growth in how many advertisers they can bring in, and growth in users, as we've mentioned. And they've had problems all along there. What we see increasingly is Facebook and Google gathering up all of the energy and all the expenditures, or much of the expenditures, going on. So as you going on online. So advertisers leaving Twitter and leaving Yahoo, where are they going to go? Are they going to go to Snapchat? That's a big question for investors this evening, trying to figure out if they want to get part of that deal. Are they going to go to Facebook and Google? Will they stay with Twitter? And the problem for Twitter here is, as David points out, they want it to be a cleaner service without all these trolls out there. I liken it to, breaking up with a bad boyfriend. You might hope there's a better boyfriend somewhere out there for you, but you got to get rid of the bad one before you can find the good one. And this is the dilemma that Twitter faces here.
Corey, you are a font of great analogies today for us. Thank you very much indeed. Bloomberg's Corey Johnson, live from a beautiful San Francisco. David Kirkpatrick, I'm very pleased to say, is sticking with me here. Now, Uber CEO Travis Kalanick has issued an apology after being caught on camera arguing with a driver. In a video obtained by Bloomberg, Kalanick is seen boasting about the company's tough culture before berating a long-term driver who asked him about falling fares.
You know what? What? Some people don't like to take responsibility for their They blame everything in their life on somebody else. Email for phone card. Good luck.
In an email to staff, Kalanick expressed remorse for his actions, saying, "To say that I'm ashamed is an extreme understatement. My job as your leader is to lead, and that starts with behaving in a way that makes us all proud. It's clear this video is a reflection of me, and the criticism we received is a stark reminder that I must fundamentally change as a leader and grow up. This is the first time I've been willing to admit that I need leadership help, and I intend to get it." Well, it's the latest in a series of embarrassing incidents for the ride-hailing giant. In January, more than 200,000 people deleted their Uber accounts after the company was accused of undermining a taxi strike protesting President Trump's travel ban. And in February, the company was besieged with issues involving alleged sexual harassment, including the resignation of an executive who failed to disclose allegations made against him at a previous job. Now, coming up, among the standouts in the market rally Wednesday was Apple, once again hitting an all-time high. One notable tech analyst says the stock still has room to run. And a reminder of our interactive TV function. You can find it at TV Go on the Bloomberg. You'll not only be able to watch us live, but also see previous interviews and dive into any of the securities or Bloomberg functions we talk about. And you can become part of the conversation by sending us an instant message during our shows. This is for Bloomberg subscribers only, though, I'm afraid. Check it out at TV Go. This is Bloomberg. Now, a stock we're watching, Apple, hit an all-time high after BTIG published a bullish report on the iPhone maker. BTIG analyst Walter Piecyk joined Bloomberg Daybreak Americas and reiterated his buy rating and raised price target on Apple.
There's a lot of anticipation building up for this new phone in September. There's maybe a difference where we haven't had a substantial difference since the 6 and the 6S came out. So it seems like the multiple can continue to creep up a little bit more. And if you look out a year and you look at 2018 earnings with growth, if they can deliver mid-single digit growth, you can get more run out of the stock.
Meanwhile, Box reported a fourth quarter loss that was better than forecast, but the company gave an outlook that trailed estimates. The enterprise cloud technology company has seen its share price almost double within the past year. And Apple just scored a major win. A U.S. federal appeals court has tossed out a $533 million jury verdict against the company over patent infringement allegations involving its iTunes software. The court said the patents owned by SmartFlash, a technology developer and licenser, are invalid. This is the second time Apple has succeeded in getting a big dollar patent decision overturned. In 2011, the iPhone maker won a reversal of a $625 million verdict over how documents are displayed on a computer screen. Now coming up, Snap set its IPO price and will begin trading Thursday. We take a deep dive on the financials and discuss if the company's ad strategy justifies its heady valuation. From New York, this is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Britain's House of Lords has passed a Brexit bill amendment that would guarantee the rights of EU citizens living in the UK. It is the first parliamentary defeat for Prime Minister Theresa May's government. The vote could still be overturned by the House of Commons. Presidential candidate Francois Fillon faced a largely supportive crowd as he toured the French farm fair this afternoon. The fair is considered a critical stop for candidates in the spring election. Fillon visited the farm just hours after he pledged to remain in the race, despite potential charges looming over his alleged misuse of public funds. Meantime, Fillon's rival Emmanuel Macron also made a stop at the annual Paris Farm Fair, but was hit in the back of the head with an egg. Macron kept the mess in perspective, saying it was, quote, part of French political life. Ex-CIA agent Sabrina D'Souza won a last-minute reprieve from a Lisbon court today and will no longer be extradited to Italy. She was convicted in Italy for her involvement in the kidnapping of Muslim cleric Abu Omar from a street in Milan back in 2003. Pope Francis led a ceremony in Rome today to mark the beginning of Lent, the most solemn period on the Catholic calendar. Catholics use the time to prepare spiritually for Easter. He asked Catholics to use the time to challenge a modern, quote, culture of indifference. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Wednesday here in New York, already 6:30 Thursday morning in Singapore. I'm joined by Bloomberg's David Ingles with a look at the markets. David, good morning to you.
Good morning, Elisa. I mean, we're looking at, we are expecting essentially momentum to really carry through into Asian equities this Thursday. I mean, you look at futures in Australia, we're better by close to 1%. Japan looks like it's going to be sitting on a rocket ship when it opens. We're looking at about 400 points there on the Nikkei 225. SPY, as you can see, they're 50 points higher. New Zealand, in fact, just topping two-week high there, so we're now looking at 5-month highs for that index as well. A few other things we're following. I mean, you have Aussie trade coming out as well, Malaysian rate decision. That being said, though, when you look at the story in the currency and the bond markets, it's really very much about positioning on what the Fed's going to do. So dollars up, yields are climbing back up. I think the question right now for a lot of fund managers here in the Asia Pacific is just how much further do I pull funds out of EM here and really chase yield in the likes of Japan, as far as the equity there, and of course U.S. One stock we're watching very quickly here, Toshiba. Foxconn Technology, that's the iPhone manufacturer, seriously considering bidding for the chip business of the company. So lots to talk about. I'm David Ingles. More from Bloomberg Tech next.
is Bloomberg Technology. I'm Caroline Hyde. And our top story this hour, of course, it's Snap pricing its IPO shares at $17 a piece. The price is higher than the expected range. Demand for the shares is said to have been 10 times oversubscribed. Now, that gives the company a value of $20 billion based on 1.2 billion shares outstanding after the IPO. On a diluted basis, it's $24 billion valuation. Now, the owner of the company of Snapchat will be the biggest social media listing since Twitter went public more than 3 years ago. David Kirkpatrick, CEO of Techonomy, is still with me, a guest host for the hour in front of the show. Joining us from Seattle is Deborah Williamson, principal analyst at eMarketer, and from San Francisco, Sarah Fryer, Bloomberg Technology reporter, who has been all over this Snap piece of news. First of all, Sarah, give us the update in terms of the amount of oversubscription. 10 times, we know that people tend to put in orders that more than they'd wished for, but it does seem to have been collating around the $17 to $18, so they did go higher.
So this is something that happens often with these tech IPOs. They want to price it at a level that will ensure that they meet the demand, but not too much that they don't get a nice bump on their first day of trading. So although it's priced at 17, because of that outpaced demand, they could have gone even higher. But Snap executives want to make sure that tomorrow, when the shares start trading, you get a nice little healthy trading bump, and people will say that the IPO went successfully.
Deborah, you're an optimist when it comes to Snapchat. Give us what the advertisers are looking at. I mean, they're a dream when you're wanting to get to the 18 to 30-year-olds, but 158 million users, how much bigger can it go?
You know, I think Snapchat has a long road ahead of it. This is a company that's really only been selling advertising for a couple of years. And we've all heard a little bit of the news about slowdowns in usage growth. But I fully believe that as Snapchat grows and matures, we're going to see more and more usage among older generations, moms, maybe even grandmas. And I think that's going to be exciting to watch.
David, that's what happened with Facebook. But really, can it be achieved?
Well, Deborah's among the few people I've heard say that, to be honest. I mean, I know a lot of the investors are certainly hoping for that, but and I respect her work, but I don't agree. I think that there's not any evidence that that is happening, so to say it could happen is highly speculative. I don't really see this company being the next Facebook. I think it's a great company. It's achieved enormous successes. It is likely to continue to be a major platform for young people, but to be a multi-purpose communications platform that spans the globe, I don't see it.
Deborah, your reaction?
Yeah, I'd love to weigh in. So, yeah, David, I respect your work as well. You have to remember that Facebook, when it first launched, was only popular with young people, only popular with college students. It took time for Facebook to build an audience among older people, and it did do that. Snapchat, yeah, you're right. It's different. My daughter uses it like you would not believe. Like, I watch her and I go, I don't really understand that, but I think what Snapchat is doing is incredibly important. They're changing communication for young people, and this is something that we need to pay attention to, just like Facebook did back when it launched. I
agree with everything you've said. In fact, I have a 24-year-old daughter who herself is a compulsive user of Snapchat. On the other hand, she also is a huge user of Instagram, although she has dropped Facebook. So let me put two things at you. One is, Instagram is directly head-to-head competing with Snap. Neither Facebook nor even Twitter really had head-to-head competitors when they went public. Second of all, Facebook was solidly profitable when it went public, and this company is so far from it. Don't you think those are big differences?
Absolutely. They are differences. And you're right. Instagram's got a lot going for it, particularly because it's owned by Facebook. But you're seeing Instagram, at least in the anecdotal evidence I've seen, teens and young adults are using Instagram in very selective ways, to only post the best things, to only follow what they want to follow, not with that rabid intensity that you're seeing young people using Snapchat. And I think that's one key difference that you've got to keep in mind as we go forward with this company.
Let's bring it back to our expert reporter, Sarah, because when we're looking at the numbers, though, as they put in their statement, their prospectus, revenues have gone up some 7 times. I mean, they're just over $400 million. People seeing that we could hit $1.8 billion by 2018 is some of the analysis out there. How they've had to adapt to making money with this business, because certainly Imran Khan seemed to have to learn a lot.
Yes, so last week I spent a lot of time with advertisers in New York City talking to them about what it would take for them to get Snap to be not just an experimental innovation side of their budgets, but part of the staple of their ad spending for their clients. And there are a few things that they mentioned. They need it to be easier to buy Snap's ads. They need to be sure of the return on investment from those ads. And they need to be able to better target and measure the audiences the way that they are able to do in other platforms. And when I say other platforms, the big one is of course Facebook. Facebook can give you very granular targeting for your audiences, but also YouTube. YouTube has really dominated in mobile video advertising, and if Snap wants to be the sort of millennial version of TV, they really need to make sure that they can compete with that. Now, they have made a lot of progress in the last year. Advertisers spoke highly about Imran Khan increasing his understanding of the market. He comes from banking, so this is very new, but there's still a lot to do.
I would just say that, Imran Khan is a genius, in my opinion. He was one of the first people to really understand how important Facebook was. He's managed his career brilliantly, too. But, one of the things that Snap has very explicitly said is they are not going to target the way that Facebook has. They're not going to gather personal data and show their ads based on that. So isn't that, if that's what advertisers are seeking, Sarah, isn't that, and maybe Deborah wants to weigh in on this too, but isn't that unlikely that those advertisers are going to get what they're looking for?
Well, they are getting some of it. Right now on Snap, they can target based on what sort of lifestyle categories you've been looking at on Discover. So say you read a lot of People magazine channel, they'd be able to target you based on that. So there are 100 plus different ways to target people by interest. Then, of course, you can target by other things like email lists that match with marketers. None of that is anywhere close to what you get on Facebook. On Facebook, you can tell if somebody recently got out of a relationship and moved to a different city, and all of these things that really help advertisers target people at a moment in their lives when they're most likely to buy something. But I think the part where Snap really is set apart is the geographic targeting. And a lot of people don't talk about this because we mostly talk about video ads, but the geo filters that are specific to retail locations or that might allow you to unlock a deal, those are becoming a lot more popular, and it's their one self-serve ad product that could meet a lot of small businesses' needs.
Deborah, let's dig into your analysis here because you've got so much data that you've really ripped apart, and give us your view on where Snap does go in terms of revenues in the next few years and what it needs to achieve, and really riffing off what David put there to Sarah.
Yeah, absolutely. One thing I wanted to mention in passing is the three things that Sarah mentioned that advertisers were looking for from Snapchat are the same three things that advertisers were looking for from Facebook in the early days. So we may see Snapchat change its tune over time in terms of the ability to target. We have to wait and see. But to get to the point about ad revenue, I mean, we're forecasting that Snapchat will have about $900 million in ad revenue this year. That's more than double than what we expected last year and what we saw in the S1. So this is a company that's growing. You're right, it's not nearly as big as Facebook, but you have to give this company the benefit of the doubt. It's early days for Snapchat. They've developed super creative communications techniques, super creative ways to advertise, whether it be vertical video or sponsored lenses, sponsored filters. All these things are new ways to advertise, and they are innovating just as much as Facebook did in its early days.
Great conversation throughout. Deborah Williamson, Principal Analyst at eMarketer, and Sarah Fryer, Bloomberg Technology Reporter. Thank you so much for your ongoing analysis. David Kirkpatrick, I'm pleased to say, is sticking with me. Now, coming up, Toshiba is looking to sell its chip business for $13 billion, and it just may have found the perfect bidder. Details next. Toshiba is looking to sell its memory chip business at a valuation of about $13 billion. That's less than earlier reports had suggested. Now, according to people familiar with the matter, Toshiba is willing to sell either a majority stake in the unit or the entire business. One company interested in the business is Foxconn. Foxconn's founder, Terry Gou, says he's very serious about the bid. For more, I'm joined by Bloomberg's Peter Elstrom in our Tokyo bureau. Good morning to you, Peter. And why would Toshiba potentially be picky about this? Surely they're going to go with Foxconn.
Well, to back up a step, Toshiba is reeling from some financial troubles in its U.S. nuclear business. Of course, it's a broad icon with many different businesses, but it's going through this process of trying to shore up its balance sheet because of the losses, this write-down that it's going to have to take with its nuclear business. So it's looking at selling a number of assets, everything from perhaps its elevator business and hospital business, but really the crown jewel of its operations is this memory chips business, which could be worth $13 billion. It could be worth a bit more or a bit less. So it's begun to solicit bids from a wide range of companies, and Terry Gou from Foxconn yesterday expressed pretty clearly that he's interested. Now, he stands out for a key reason. All the other technology companies interested in this are already in the flash memory business, so they would face an antitrust review or some kind of regulatory scrutiny that could slow down the process, and that's a problem for Toshiba because they need to be able to get this cash pretty quickly. There are also financial bidders in the mix, including a couple of PE firms. But they will not have the opportunity to capitalize on synergies the way perhaps some of these technology companies themselves can. So Terry Gou bid for Sharp in Japan, won a very, very contentious battle to be able to take over that company. And he looks like he's coming back to Japan for Toshiba's chip business.
Well, I mean, it is a crown jewel of any company, and this is one of the central technologies of modern life. So, we have to look at this and see, why he would certainly want to own it at Foxconn because, if you can, and also we've seen how beautiful Foxconn is at executing things and just creating this incredible production machine. And so they will take this technology and drive it forward in a way that others probably cannot. So I think it's kind of a promising idea, but I think it's got to be tragic for Toshiba to lose this extraordinary business.
Yeah, Peter, the valuation, $13 billion, why is it now looking potentially less than they'd originally gone for? What are people picking apart?
Well, certainly bidders know that this is something of a fire sale. Toshiba has to sell. It has to sell relatively quickly. It would like to avoid a tough antitrust review if it goes with some of the other bidders that are already in the flash memory business at this point. It also has this challenge that the Japanese government is not anxious to let this business go abroad. Terry Gou does have a lot of potential to come into this, but he's never really run a business like this before. It's incredibly capital intensive. It's very cyclical. The core business of Foxconn, of course, is assembly. They have these enormous plants in China where they make iPhones and PlayStations and things like that. This is a much more capital intensive business, so it'll be a challenge to integrate it, but he has shown some promise with the Sharp investment that he made a year ago.
Peter, how would you compare this business, this memory business, with some of the other top players in the market, and how important is it relatively?
Well, Toshiba is number 2 in flash memory behind Samsung. Samsung is the leader in this market. And then the others that are below those top 2, SK Hynix, Western Digital, are all a bit smaller than Toshiba. So it's certainly a very, very good business, a very strong business. The Japanese government has been asked questions about whether they would be okay with a foreign bidder taking over this operation, and so far they've said, with some hesitations that they probably would, although it's very strategically important for the technology industry. They've been proud of this historically, but I think at this point there aren't domestic bidders that have emerged that look like promising contenders the way, say, Foxconn or some of these other companies have.
Peter Elstrom, as ever, thank you for coming on and joining us live from Tokyo. Great reporting. And David Kirkpatrick, CEO of Techonomy, bids a farewell. He, of course, is our contributing editor, Bloomberg News as well. Thank you for being live with me here in New York.
Thanks for having me.
Great to have you in person. Now, coming up, we'll speak to a CEO who is betting on the next big growth market for wearables that targets your ears. That's next. And this is Bloomberg. wearable suppliers are looking beyond the wrist, and Doppler Labs, this San Francisco-based startup, is pioneering a new gadget category known as hearables, launching Hear One earbuds, which can augment sounds from the world around us. Now, Bloomberg editor-at-large Corey Johnson recently spoke with Doppler Labs CEO Noah Kraft in San Francisco and asked, well, what problem Hear One is aiming to solve?
I wouldn't say we're exactly trying to solve a problem. We're trying to give people superhuman hearing. And what that means is giving you the ability truly to control how you hear the world, so you hear what you want to hear and don't hear what you don't want to hear.
So these aren't just headphones?
Definitely not. They're, headphones plus in the sense that they do stream music. But basically where we started as a company is there was a predecessor product for this called Hear Active Listening. And all it did was allow you to augment the outside world. You could turn them
kind of like tin cans with string between them?
I'd say it's like spectacles, but for your ears a little.
I like spectacles today.
Yeah, so it's a little, the first product was a bit of a toy. And the idea was we wanted to give you control over your hearing. And the basic premise behind that is we believe as a company the future of computing is going to happen on the body, right? Everyone's making these bets on the eyes and on the wrist. And we made an early bet on the ears. We believe that in-ear computing, or putting a computing system in your ear, is going to be the future of how we interact with technology, mainly because voice and audio are a much more natural way to interact with each other and interact with computers. Tapping on a piece of glass is one thing. Me just saying, hey, order me an Uber, or hey, dude, I want to go to dinner with you, and having a back end just set up that calendar invite is a much more natural way to compute.
And we see that happening with Alexa, with Google Play and stuff.
Absolutely. We got very lucky, to be honest. We were building, in a vacuum, very secretly, this product that we consider the first in-ear computer, and then Apple removed the headphone jack. That was a huge moment for us because we're a true wireless product. So we do stream music, so that's obviously awesome. But also the rise of voice. We kind of called that a few years ago, and then, of course, with Alexa, Google Home, all these things, it's become mainstream.
Well, away from your product, what did you see happening technologically that was leading to this voice? Were there things, because you definitely saw a lot of, Google's getting criticized, has seen some criticism from the likes of Mark Benioff and others about just jumping on the voice bandwagon. But it seems more like there was a technological wave cresting as it relates to voice.
It's a great question. For me, it was actually more cultural, right? I'm actually not an engineer. My background's in film and music, and what I saw was computers becoming kind of more and more alien. You can think of Google Glass. We started this company right in that moment where everyone's like, people are going to put tech on their faces and wear it all the time, and it's going to be awesome. And I was sitting there saying, no, they're not. And then simultaneously, you had this whole movement of Beats, which was we're going to get people to wear 5 pounds of plastic on their head and do it proudly.
With weights added to it that had no audio quality, but made you think you're spending money more wisely.
There were these cultural forces happening, and I don't think Silicon Valley was following it as much. They were obviously starting to think about AI and voice, which is a big part of what we're doing. And so we said, look, we think there's a coalescing point of these two this on-body technology. People use the term wearables. We don't like it because wearables right now are usually commoditized tech that you throw away, gadgets. But on-body tech, truly indispensable computing on your body that leverages cultural relevance. And for us, that means we've worn tech in our ears for decades. Why not leverage that? And the analog there is the iPhone, right?
Consumer electronics are historically kind of what airplanes are to big investors, consumer electronics are to other investors, where it's just to say the businesses just inevitably fall on their face. They get inventory problems, they get gross margins, they get compression, and they get competition from companies that don't care about patents and just make cheap copies overseas. But you've got companies like Fitbit, which have fabulous margins, or Apple, which have fabulous margins, that are very deeply in the consumer electronics space. How do you make sure you're one of the latter and not one of the former?
It's a great question. We pride ourselves on not being a gadget. And when I say the best analog is the iPhone, there's two big things there. One is Steve Jobs was smart enough to launch a pocket computer and not call it a pocket computer, right? The iPhone was a pocket computer, but he was smart enough to say, hey, people are already carrying computers in their pockets or phones in their pockets, and I'm going to leverage that to get them to carry this new device, the iPhone. Now, it's easy to forget the original iPhone didn't even have an app store. And so it's two things. One is, to dovetail on my cultural thing, we're leveraging the headphone to get into your ears. And we want to build a much larger platform on top of that. But to also answer your question, the way we don't become a gadget is you really do have to focus on the software and the back end. And that's what Apple did, right? Not only is the hardware great, but you have this incredible app store and you have this connectivity to this much more robust content ecosystem and software platform that makes it truly indispensable above and beyond the the hardware.
Further, when you look at this business, where are you guys in terms of development?
No one's doing what we're doing. There's a lot of headphone products. There's now a lot of true wireless headphone products, but we actually have 4 processors in each of yours. It truly is a computer. And what that allows us to do is the audio entering your ear actually gets stopped and transformed. We're the first product you can wear in your ear and still interact with the world around you.
Fascinating. That was Doppler CEO Noah Kraft. Now that does it for this edition of Bloomberg Technology live from New York. Tomorrow, we'll of course be covering the Snap IPO from every single angle possible with live reports on the New York Stock Exchange along with a slew of great interviews. You do not want to miss it. Remember, all episodes of Bloomberg Technology are live streaming on Twitter. This is Bloomberg.